In the heart of Europe, where mountain ranges soar, lies a land that's famed for much more than fondue and yodeling galore. It's home to a banking empire, shrouded in mystery and wealth, a place where the world's elite come to safeguard their riches with stealth. But how did this small nation become such a financial powerhouse? What secrets lie behind the doors of these Swiss banks' inner houses? Come journey with us as we discover why Switzerland reigns supreme in the global finance land. You might think you know the reasons, but this video will make you think twice. Swiss banking has a long and storied history, with its roots in the Middle Ages when merchants from northern Italy and southern Germany would go to Switzerland to conduct business. During times of war and political instability, the Swiss were trusted as a natural haven to deposit money and goods. With an influx of European aristocracy, the country's banking center flourished in the 18th century. The reputation of Swiss banks as trustworthy, discreet, and able to keep secrets grew through time. A pillar of the Swiss financial tradition is the country's strict banking secrecy rules. These regulations, which date back to the early 20th century, were put in place to ensure that clients' financial information remained private. Because of its strict secrecy regulations, Switzerland has become a new popular destination for the world's wealthiest who want to keep their assets hidden from public view. Bank secrecy and financial discretion in Switzerland have an intriguing history dating back just over 300 years to 1713. A cantonal council in Switzerland, called the Grand Council of Geneva, passed a code of confidentiality that made it illegal for banks to share their customers' financial details with anybody other than the clients themselves. It was stated in the code that the requirement for such information sharing requires the approval of the city council. It was believed that these codes and regulations were facilitating tax avoidance and indeed tax evasion. It is not surprising that the great French writer and philosopher Voltaire came up with the gem in 1794: "If you see a Swiss banker jumping out a window, follow him, for there is sure to be profit in it." So, what made Switzerland an early tax haven? The answer lies in the law. Back then, secrecy in Swiss banking was only covered by the civil and commercial codes. This meant that any client or account holder who felt their privacy had been violated might seek damages against any bank or bank employees responsible. However, disclosing information was not a crime and was not penalized by jail time or other legal sanctions. Late in that century, some of Switzerland's oldest banks, Lombardo Derrière Hensch and C, 1796, and Pictet C, 1805, were founded and became a financial refuge for fugitives from unrest to safeguard the riches of aristocrats fleeing the French Revolution. Controversies and scandals. The Swiss banking system is not immune to scandals and disputes. Swiss banks were accused of helping their clients avoid taxes and launder money throughout the 20th century. Swiss banks also came under fire because of their alleged complicity in the Nazis' use of wartime loot. The circumstances that led to the passage of the secrecy law were actually because of controversies and are fascinating to learn. In the 1930s, with their economies still bleeding from the Great War and the Great Depression that followed, Germany and France began searching for tax revenues that had been hidden in Swiss bank accounts. In 1932, French officials raided the Paris branch of the Swiss bank, Balzer Handelsbank, in pursuit of clients who had opened accounts with the intention of evading taxes in France. The discovery of these assets, totaling almost 1 billion French francs, were labeled a fraude fiscale, which means tax fraud, and resulted in further crackdowns on the bank, including the disclosure of account holders' identities and the arrest of 2 bank employees. In the same way, a rule was passed in Germany that made keeping foreign money in Swiss banks a crime punishable by death. Several offenders were being put to death by Germany, with Swiss banks coming under the Gestapo's radar. Jews were also targeted for their supposed involvement in tax evasion. Also, the Nazis used Swiss banks to plunder Jewish assets before and during World War II. By forcing their victims into signing the necessary papers, they could more easily move money from Swiss to German accounts, as the Swiss rarely got in the way. However, Switzerland steadfastly remained neutral throughout both world wars, refusing to budge from its 1815 proclamation of non-interference and independence. In fact, it saw these French and German threats and actions as aggressive against its economy, and passed a legislation strengthening bank secrecy in 1934. In 1984, Switzerland held a national vote on a proposed change to the constitution that would give tax officials access to bank records. However, with 73% of the vote in favor of bank secrecy, it was ultimately unsuccessful. Several scandals in the late 1990s and early 2000s, most notably the one involving Raul Salinas and Citibank, Zurich in 1998, have cast doubt on the reliability of Swiss banks and their complicity in tax evasion on the part of their clients. Similarly, in 2008, Bradley Birkenfeld, a former employee of the Union Bank of Switzerland (UBS), turned whistleblower, pled guilty to charges of conspiracy to defraud the U.S. Internal Revenue Service by aiding U.S. citizens to escape taxes on assets concealed in Switzerland. After being under suspicion for years, U.S. citizens had offshore accounts at UBS, and the firm finally consented to release the names in 2009. UBS issued a statement back then saying, UBS sincerely regrets the compliance failures in its U.S. cross-border business that have been identified by the various government investigations in Switzerland and the U.S., as well as our own internal review. We accept full responsibility for these improper activities. However, Switzerland recently signed a historic agreement to share information with the Organization for Economic Cooperation and Development, with a deal to exchange data with 60 countries. So what are the benefits of Swiss bank accounts? The major benefits of Swiss bank accounts are their low financial risk and high level of privacy. The Swiss economy is one of the world's most stable since the country has avoided major wars for centuries. Furthermore, Swiss law mandates high capital requirements for banks and strong depositor protection, essentially guaranteeing the security of any deposits in the face of economic disaster or armed war. Accounts kept in Swiss francs will earn a small amount of interest, but they will also have to pay the Swiss withholding tax. This is why most non-Swiss citizens keep their money in a different currency in their Swiss bank account. When it comes to customer confidentiality, Swiss law forbids the bank from revealing any account details, even the account's very existence, without the client's express consent. The only time this policy will be broken is if a government agency has reason to believe a depositor is involved in a significant criminal act or has other financial issues such as bankruptcies, divorces, or inheritances that require disclosure. In addition, depositors in Switzerland are obligated by anti-money laundering laws to disclose the source of the funds they deposit. Furthermore, Swiss anti-money laundering regulations also require depositors to provide proof regarding the origin of the funds they are placing in their accounts. Stability and security. The stability and safety of Swiss banks are well known. The country has been politically stable for quite some time, and this has helped establish its reputation as a haven for investors. The Swiss banking industry is also heavily regulated, and Switzerland has a reputation for strictly implementing its laws. The Swiss National Bank, the country's central bank, is crucial in ensuring the financial system in Switzerland remains robust. International expansion. Swiss banks began their global expansion in the 20th century when they opened overseas branches and subsidiaries. This growth strengthened Switzerland's status as a world-class financial hub. Swiss banks also started handling offshore account management, helping clients with things like tax minimization and wealth management, in addition to traditional asset protection services. Future prospects. The legacy of Swiss banking has a shaky future. The international community is pressuring Switzerland to modify its banking legislation in the face of rising competition from other global financial centers. However, the country's banks retain their status as some of the safest and most reliable in the world, and their commitment to privacy remains untarnished. The history of banking in Switzerland goes all the way back to the Middle Ages. Switzerland's banking sector is internationally admired for its dependability, solidity, and privacy. However, the sector has also been plagued by scandals and disputes, casting doubt on the longevity of the Swiss banking legacy. Nonetheless, Switzerland's banks continue to be regarded among the most secure and reliable in the world, and their reputation for discretion and confidentiality remains a hallmark of the country's financial sector.